This video was posted this week on WallStreetBets, a Reddit forum dedicated to discussing stock and options trading. This little rocket represents GME, the stock ticker for video game retailer GameStop. For weeks, users of the subreddit have been encouraging each other to scoop up shares and make bullish wagers on the stock. In less than a month, GME rose from under $20 a share to well over $300 on some days, before falling on Thursday after brokers placed restrictions on trading.
Wall Street has been totally stunned by what's happened with GameStop. This has basically never happened before.
Alexander Osipovich covers futures and stock exchanges for the Wall Street Journal and has explored the forces behind GameStop's dramatic swings.
GameStop has become a battleground between small investors who are banding together on online forums like Reddit and professional investors who are shorting the stock or betting that it will fall.
Here's what's going on with GameStop.
WallStreetBets is one of the most popular forums on Reddit. It's a place where people get together, share trading ideas, and go after particular stocks in a kind of coordinated fashion. They can cause a big run-up in that stock's price.
In recent weeks, investors on WallStreetBets have targeted GameStop's short sellers who saw the company as overpriced and were betting the shares would fall. The WallStreetBets crowd was buying up shares and betting the opposite, causing the stock to go on a wild ride.
Behind that is a couple of things. One of them is momentum trading. That's when people chase gains. They see a stock is going up, they buy more of it because it'll likely keep going up.
But while the rise might have appeared to be as simple as average investors buying shares and pumping up the price, it also had to do with options. Options are contracts that allow investors to buy or sell a stock at a specified price, either on or until a specified date.
It has gotten a lot easier and cheaper for people to trade options over the past few years.
Now the world is your trading floor.
Commissions have come down, and brokers have invested a lot of time and effort into making easy-to-use interfaces to allow people to buy and sell them and even do complex strategies.
Options trading volume set a record last year, averaging just under 30 million contracts a day. This year, that number is over 40 million. Options come in two forms. Put options confer the right to sell shares under specified terms, and call options confer the right to buy them. Many of the WallStreetBets users were buying call options to bet that the price would rise. Look at the market on Tuesday, January 26th, for example. GameStop closed at just under $148. At that moment, call options to buy GameStop shares at $200 apiece by Friday were trading at just $19 a share. If GameStop rallied, the price of the options might have risen, and call holders would have been able to sell these options for a quick profit. The question is, why were the shares surging when much of the action was in options? It's because when an investor buys a call option, someone else has to sell it to them. Typically, an electronic trading firm that buys and sells stocks. When they sell the investor the call option, they often hedge their bet by purchasing shares of the stock in question. GameStop options trading volumes exploded during the past 2 weeks, especially for call options, which drove brokers to buy more of the stock, driving it up even further. This dynamic isn't just playing out with GameStop. Traders at WallStreetBets moved on to AMC, BlackBerry, and Nokia as well. Amid soaring shares, on January 28th, popular online brokerages, including Robinhood and Interactive Brokers Group, restricted access to trading high-flying stocks, including GameStop. Shares plunged.
Trading a stock like GameStop in a situation like this is extremely risky. If you are playing with this stuff, you are playing with fire. It's unclear if the authorities have any means of reining this in.
WallStreetBets users called foul, some pledging to find other ways to participate in the market, regardless of the chaos it causes.